my 250th. I told my kids I've been around 19.2% of the American experiment,
That's interesting.
which is kind of,
That's cool.
it's kind of crazy if you think about it. A lot of you are much older than me, which means you've been here for a larger percentage of the American experiment. Truly a unique place. I think if you travel abroad, it has always driven home how spectacular Americans.
See, it made me yesterday night we started watching Rocky with Mikey. I said everything in my life I derived from Rocky, but the first Rocky one is in 1976 for the centennial.
That's right. That's right. You got look, you've got a really special thing happening right now. If you're a World Cup soccer fan, you've got a lot of international travelers from Europe coming to America and driving across America and driving from city to city, seeing our spectacular sports stadiums, seeing the mass affluence of suburbia in America, realizing that a McMansion in America is quite prevalent. We have big cars and we have big grocery stores. I read a great piece from an Australian guy who talked about he had no idea that he could come over to America and run a Buc-ee's and be in the top 1% in Australia.
Hey, one of my buddies that's a cop, he pulled someone over the other day and he said, man, he says, I got up there and the guy had a $20 bill in his hand.
Yeah.
And he said, what are you doing? And the guy's like, well, isn't that what you pulled me over for? And of course, everything's camera. He's like, don't give me that. Now I got to call a supervisor. But that's what they're used to, man. And they don't realize that's not what it is here.
Yeah. I think obviously the one that has stood out to me most has been this discussion about air conditioning, about the places that air conditioning is in the United States, and the Europeans talking about places that it isn't back home. And I learned the statistic that more Europeans die from the various heat waves they experience throughout the summer than Americans die from guns. So you've got statistically some things. I think the Europeans may have to start asking themselves about air conditioning and whether or not it makes sense in some places for people during heat waves like this summer. But anyway, thanks for being here. It's our 79th call. It's July 6, 2026. We're glad you're a carnivore. Remember, we're not a registered investment advisor, though. Past performance is no guarantee of future results. All carnivore trading portfolios are hypothetical. Nothing on this call should be construed as individual investment advice. And always remember, do your own damn research. We'll help you. And we'll beg, borrow, and steal from all these fine people. But we like to think that we have occasionally a unique thought or two. So here is a chart I think that kind of sums up some of what the market is dealing with, digesting, trying to figure out. The great earnings divide. The gap between forward and trailing multi-year earnings has never been higher. We've got this huge gap between forward earnings and sort of this seasonally adjusted earnings. And I think the market just keeps asking itself, is this real? Is this the peak of the earnings cycle? Are we embarking on some sort of new found years of profitability and higher margins? And I think the market's really struggling to digest a company like NVIDIA or Micron and whether or not those earnings are sustainable. That's why you don't get the big multiple. That's why you don't have the really high PEs in the names like NVIDIA and Micron. You have these really low price earnings growth ratios, right? That we've talked about on these calls sort of over and over again. So this is that sort of market in question, if you will, meaning, man, we're really happy with this explosive earnings growth that we've seen. It's been spectacular. The market's responded, but is it going to carry through to the future? The market seems to be somewhat in doubt. Hey, what's not in doubt is the fact that we are dominating the Chinese stock market. In fact, Chinese stocks trail global peers by the most since 2001 attacks. We got a sluggish economy, weak consumer demand, and in general, a country in a great deal of malaise. They have lost all the gains in the real estate market over the last 20 years. And I think this discussion about this, surging China, supplanting U.S. Dominance, fiscal dominance, economic dominance is really not playing out in real time. At this point, they were already supposed to have passed us in total GDP and they have not. So that trend line growth rate has decelerated rapidly, and the Chinese are falling behind us now. So I think you're seeing that play out in markets, contrary to what you may read in the media. The other thing that keeps me pretty bullish and optimistic going forward about this economy are the transport guys. I watch the Dow transports. I watch the trucking sector. I think in a lot of cases it's probably a better real-time source of information on the American economy than some of the lagging survey indicators that you get from the Fed and others. So here we are. As long as the transports stay kind of trucking along, so to speak, I think you're okay. So let's get into the funnel and where we're at and kind of what's playing out. Look, we've had a nasty pullback in some of our high-flying sectors like semis over the last couple of weeks. Some of that was driven by technicals. Some of that was driven by a market that had gotten ahead of itself, just technically, price action perspective. But another was this inflation scare that we were experiencing, this hawkish Fed talk that we were kind of getting. And I think it kind of reached its crescendo and it's probably peaked out, given where we see oil playing out now and given where I think you're going to see some of the Fed's preferred indicators coming in the future. So here's crude oil. We're down at 68.66. So all the way back to pre-Iran sort of attack levels. This is kind of going to be what is sort of your baseline comparison of where we're at versus where we started. So we're kind of right back to where we started. Most of that jump in inflation that you had seen was from this spike in crude oil and in energy. So hopefully you're going to see some of that get quickly squeezed out of those numbers in the following sort of sectors and data points that come out. I think this should set up a lower inflation narrative and then a declining yield environment for bonds. We've shown you the 10-year time and time again. Here we are back at 448, sitting at the 50-day at 446. So you want to continue to see this just be range bound at best. That's a 3-year chart. Here's a 5-year chart. You can see how long we've been here. As long as we're here, it's okay. You just don't want to break this box. What you really want to see is this come down. But we just can't seem to get that happening. So, that trifecta of, hey, lower inflation, declining bond yields, and accelerating corporate earnings growth. Well, we've got the corporate earnings growth. Well, we've talked about that. What we need now are the declining bond yields and lower inflation. We're not getting those. We need that virtuous cycle kind of to really leg this thing up explosively further. We also told you we kind of entered into this midterm malaise season, if you will. We got a bunch of communists winning elections. We're not going to drone on about that again like we did last call. I did a lot of that on the weekend on X, wrung it out of my system.
You did.
So we've got kind of this midterm lull. Maybe we're in, maybe we're not. But we need this pattern in the 10-year treasury to hold. Okay, that's kind of my macro top of the funnel, button issue is the 10-year and sort of holding here. And I think if you get accelerating or decelerating inflation back towards 2, like Goldman's talking about in the second half of 2027, then you're going to get the 10-year back down. And as we say every call, I always, with the asterisk, hey, as long as the Fed isn't overly hawkish, inflation doesn't necessarily have to be a bad thing. So if we can just get the Fed to sort of shut up, fall in line, maybe ride things out a little bit, stop talking about rate cuts, hikes so much, everything will normalize eventually with time as energy prices come back down and that data feeds into the system. Okay, so how is this going to play out in the stock market? What was it impacting? Well, we had told you the MAGs had really been weighing on the broader indexes and that we had to catch a bounce on the last call. Well, lo and behold, that's exactly what we got. So your blue line represents MAG's post-call last week. Got a nice, vigorous bounce across the board. Big names like Apple, which looks like it's already ready to run to a new high. Softy trying to double bottom. Amazon holding its 200-day. Just going to go through the big $1 trillion names. NVIDIA sitting above its 200-day, still trying to hold. Meta, one of the weaker names, still below its 50 and 200. This is probably your weak link. Want to see it hold 550, 575 in this area here that's tested a couple times. So you've got the bounce in the mags that we needed to keep the indexes alive. And here you are. They're alive. So good to see the mags join the party. We also, I told you on the last call that we had 65% of the components above their 200-day, which was the most since early March. So the breadth underneath the market was solid. We've been writing about that consistently in the wrap. Now, this is from Ryan over at Carson Group. Big Q2, like we just had, should have the bulls smiling. Here's your Q2 returns from 55 going back to 26 like we just had. Q3 returns, pretty good every year except 75. Q4 returns, good. Final 6 months of the year, positive double digits every year except 75, which is probably not a good analog because that's a 70s stagflation, oil sort of driven cycle. And that's not what we're in. Now, if you could have said, hey, oil was still at 120, then maybe that would have made a lot of sense from a analog perspective. But in this case, I don't think the 75 does because of what's happening at oil being at 68. You throw that out and you look, wow, looks like pretty good numbers going forward. So a lot of reasons to be bullish. Also, this June 26 to July 15 performance time period tends to be pretty solid. This is from Wayne Whaley, also a former Yellow Jacket, coming in with a 25-0 up sort of time period when you have a June 19 to 26 setup like we did. So we were down 1.95%. And then coming into that June 26th to July 15th rebound, you get this average change of 3% on a 25-0 basis. So we got a lot of reasons to think we could rally for the next couple of days. Remember, we had shown you this on the last call, the June swoon. We were here. And then last call, we were here. So we'd gone through the June swoon. Maybe that July period would be a little bit kinder to us. All right. Finally, look, we brought it up every time. It's a revolution, guys. Either you get it or you don't. Either you believe in it or you don't. To really take this thing to the next level, the government is going to have to get involved. We think they will. The president seems keen to. You got all the major players, Musk and Jensen, Altman, Taiwan Semi-Micron, telling you it's just getting started. And I think we got this politics is now nationalism versus socialism. And every week we get a little data point that confirms what I'm saying, right? So last week it was the OpenAI proposes handling 5% stake to Trump administration. So this is exactly what I'm talking about. This was, a clear nationalization of this AI, project, this AI technology, this AI weapon that we are developing as a private and public venture. And I think you're going to continue to see these types of headlines going forward as we will blur the line of what some consider sort of free markets and free market capitalism. I think it will be done on the basis of national security reasons. All right, the trend. Remember, bulls live above the 200-day, position traders above the 50, intermediate term traders above the 20 and 21-day, swing traders above the 5. So where are we? Well, in the last call, we told you we were battling to hold the 50 in the Qs, but we did it. And everybody closed last week above the 50, so we went back to 5 of 5. We got this nice little wedge in the Qs that will probably be resolved this week, hopefully to the upside. S&P's acting a little better, a little firmer. May try to take out that high around 760. So a little bit firmer pattern, a little more of a flat base look to this in the S&P, a little less wedgy, if you will. So both consolidation patterns, though, after that good move up. Dow just trucking along, as is the Russell. both of those have more what I see as kind of this pretty clear trend channel. They're just kind of running in. It's pretty wide, and we're close to the top end of it, but the 50-day has been a nice little support line. And the Dow and the Russell are kind of doing their own little thing outside of tech and the stocks. Speaking of stocks, since I brought it up, look, it's all about the semis, guys. Can they correct in such a manner that we don't cause a massive correction in the market? It's going to be tough. Such a huge move. They're holding the 50, so we're up here, right? We've got a lot of charts that look like this. AMD, Intel, all of them still above the 50, but getting close to the 50. So we need this chart to do a little more of this, right? Sideways in time, correct in time, and less of this. If we start pulling back, that's going to weigh on tech. If the stocks in general starts, looking like, hey, I want to roll over and test the 50 and, maybe come back down like this, this is going to weigh on the Qs and break that wedge to the downside. So this is really what we're watching. The semiconductors, you don't have to want to trade them or play them per se, but they got to hold up here. Here's Micron at 995. That's your poster child over in memory. SanDisk as well, 50 days at 1626. So all those are holding. We got SK Hynix IPO this Friday. So we gotta see how the market digests that. So look, we're at 5 of 5, but the model has been waffling. We've been going from 4 to 5 to 5 to 5 to 4 to 5 to 5 to 5. Not what you want to see. So you got to take into account that this 5 of 5 is a little busted. It's a little broken, right? We've been waffling back and forth. Not a pure, hey, we just went 3, 4, 5. Let's scale into this thing. The market's got a little uncertainty here. Okay. Earnings are mostly behind us. Everyone's questioning this outflow from the mags and whether or not this big AI bet's going to pay off. According to Half of X, they're a bunch of criminals and idiots. I'm not sure I buy that thesis, but people believe it. So maybe that's a little bit of fuel for the more upside. Look, we've got quite a few names that have invested quite a few dollars. The Metas, the Microsofts, the Amazons, they're all burning massive amounts of cash. They're all burning into their free cash flow. Some of them are even borrowing now. Google, Oracle. Oracle's borrowing money, to the tunes of hundreds of billions of dollars. So you've got this issue with ROI on this borrowed money and this AI return on investment for these major hyperscaler investors. Here, Oracle probably being the poster child of this phenomenon, sitting on the 200-week moving average like we have been, dramatically oversold and have coming, just slam back down after a little bit of a dead cat bounce off this level a few weeks ago. So Oracle really kind of the poster child of the hyperscaler CapEx question mark, if you will. And as it relates to this semi thing, the problem maybe with semis going forward isn't that earnings aren't going to be great. It's just that earnings are probably going to cool off. So from 2026, here we are with this massive jump. And now you've got, although strong growth going forward, you've got decelerating growth. So here again, maybe this memory trade, this stocks trade, this AI trade really may need to base for a while. Okay, so when you really zoom out, start looking at it on a weekly, and you think, okay, wow, maybe this is something that's going to be correcting for a little bit of time, like the rest of the year. Okay, so I think you got to be open to maybe this trade that worked so well in the first half of 2027 having cooling off and just kind of hoping it doesn't roll the market over. We're burning off that massive overbought condition, but man, we're still up here on a weekly basis and we're still really extended from the 200-week moving average. So semiconductors are a cautionary tale here. and I got my eyes on them to see how we move forward. Okay. Energy and tech should keep driving earnings growth forward, though. So I think obviously the energy numbers, given where oil prices were, are going to be spectacular. As will IT. Materials and utilities also jumping in the fray, communication services. So we're going to see growth everywhere except maybe healthcare and earnings, and that should bode well for the market. Now, what are we watching? Well, a couple of things. Citadel's measure of single stock dispersion went from the highest to the lowest historical percentile in under 60 trading days. Okay, what does that mean? That means that we just had a major momentum unwind. Okay, so all these stocks that had worked so well in, optics, semiconductors, the space trade before the SpaceX IPO, all the stuff that had just been brutally outperforming the broader market just had a massive correction. Okay, so that dispersion went from being at an all-time high now to an all-time low after that correction, which is good, which means you've kind of reset the momentum clock, right? So all the things that had been blown out and had really extended themselves, well, now you got a lot of busted charts, and you got some names that maybe you can start trying to pick up the pieces from. Those would even include names like AXTI that we had traded, bouncing hard today. AAOI in that optics trade, so we got some stuff that really had unwound pretty quickly, pretty hard. Something like Iran, right? And now that outperformance is done, it's been unwound, and so maybe the clock gets reset on some of this momentum stuff. So keep your eye on that. I also want you to keep your eye on GPU rental rates, because I think that's your best indicator as to what is going to happen with these neo clouds. You saw last week Meta had come out and announced that they were going to start basically becoming a neo cloud and renting out some of their shelf space that they have online. The market had responded positively on the news to Meta stock, but it had crushed all the other players like CoreWeave and MBIS. I think as long as GPU rates are rising, that's probably the wrong conclusion. If Meta's moving into this, it's because they see a business opportunity, which would validate the MBIS business model and thesis. Now, here again, this is something that, from a trade perspective, MBIS may need to cool off because of its toward run that it had been in. So I could see this one sort of maybe being in a broad box, even from 3 to 200 type range. So just know that, even though the fundamentals are intact on a lot of these stories, from a price action perspective, there may be better places to be. But we're watching that GPU story because really, as long as GPU rates are rising, the hardware is being used, and it's less likely that we are actually in some kind of bubble in terms of this cycle and where we are in the build out. Now, what I think is also important to illustrate is that this go around AI isn't just technology stocks. You've got consumer discretionary names, industrials, materials, communication services, and financials and utilities, as we just mentioned, that are all benefiting from this build out. Okay. Really, the only sectors that aren't are real estate, healthcare, energy, and consumer staples. And those are your lagging sectors, more broadly speaking, obviously, in this cycle. So what AI has done has been lift all boats, not just the tech boat, but other sectors as well, because the build out is so capital intensive, and it really builds in and requires materials and industry and human capital from a lot of other sectors. So the AI trade is important beyond just tech. And here again, we see over the weekend Anthropic signing a 20-year lease at the Justified Data Campus from TeraWulf to secure 401 megawatts by 2028. So, the key players continue to build out the wattage, and the large language models and hyperscalers continue to rent them. So we're seeing Wolf respond positively on the news, and here again, this is just kind of, I think, economic validation of these companies' business models long term, via these long term contractual leases from these key players like Anthropic. So we'll look out for more news in that sector, which has been sort of a critical part of the AI build out trade and has been a big part of our success in the sector rotation portfolio, names like MBIS. Okay, so again, looking at moving averages to try to see which sectors and how many stocks are above key moving averages. You can see outside of energy and communication services, most things are in the green. We've got a lot of names on the short term in the green in consumer staples, healthcare, and utilities. So that's that sort of lagging part of this trade over here that had benefited from some rotation over the last few weeks when the AI trade had cooled. Okay. But as much as I like the broadening of the market and as much as I like seeing things like insurance take a leg up, okay, in the end, guys, and hey, even things like, genomics. Here's that ARC Genomic Revolution ETF. Looks like it's got a nice big cup in, so we could see some more action in genomics and some of the pharma names, some of the therapeutic cancer names, oncology names. But what I really want to see are some names like the space trade catch a bid. Here's UFO, good chart from Heisenberg. Want to see UFO and this space trade kind of bounce off that 200-day and try to run. Maybe SpaceX hold, these IPO lows around 147. I don't think you want to see that go lower. Maybe see Rocket Labs trying to get back above the 50. So would like to see some of those momentum thematic sectors that had gotten beaten up in the correction come back. I also think you want to watch this IGV SPX software sort of ratio. This is an interesting chart. We had run up and sort of had an ABC correction in the IGV versus software. The real question is, where do we go from here? IGV is the software ETF, bouncing hard again today. Looks like it may have tried to put in a double bottom. We added ServiceNow to the sector rotation portfolio on this thematic, on this idea that maybe we've got a bottom cooking in software. Okay. So we got our eyes keenly watched on that. Maybe there's something there longer term. So we'll be watching this sort of chart to see if this sort of low holds, if we're going to keep running. But when I look at the winners today, guys, there is some heat. Credo and Iron Ping looks like it's kind of set up in a nice little box. We got earnings tomorrow, I think. Cypher running, Fuel Cell running today. We're actually going to take profits in the short-term portfolio today. I've got a short-term gain there, but I added it to the sector rotation on Friday. Here's A-Lab working nicely. We're going to close that one out in the sector short-term, long-term trades today as well. So you've got some recovery in names like AXTI, Credo, Iron, Ping, and Wolf, Cypher. You've got names like AMD holding up, right? Looks like it wants to run to a new high. VRT, obviously part of that AI build out, recovering. So look, we've got a nice bounce today. There's TE bouncing. Here's PER, which I think is setting up nicely. Hyperliquid is trading pretty well. PER is going to track that very closely, guys. So keep your eye on that. We had Bitcoin up to 63 over the weekend. There's ANET that looks like it wants to break out today. I really like that stock. ANET looks great here at 175. We had featured that in the wrap a few weeks ago as a VN stock of the day. So look, guys, a lot of names that got beaten up hard last week, bouncing hard. Look at CrowdStrike, new high today. There's a AAOI trying to put in a bottom. So you can see in a day where the Russell's up 0.5%, the S&P's up 0.7%. We got a lot of stocks, momentum names that are up 17 to 10%. Many of these we hold in the sector rotation, so that's good to see. And I think I'm just of the belief that if the Qs can hold here and the semis can hold here, we could have another little leg up in the market in this little seasonably bullish July time period that we have outlined for you now, and then maybe in Q3 and 4 based on history, guys. Right? Okay, so quickly, I'm going to give you the update on the systems check. We've got very, very few stocks near the pivot. So I want to see that build. IBD is running about 60 to 80% exposure, so we're a little more bullish. Our systems are a little bit more bullish than theirs. Color guard's been choppy of late. No clear indication there, so we'll like to see that improve in the coming weeks. Have not had a good 3-to-1 advanced decline line in a long time, so we need a little bit better participation from the Russell to get that 3-to-1 number, and that reading has been, I don't know, it hasn't been there in a while. So I'm kind of watching out for that number as maybe a sign we've got some improvement in the total number of stocks that want to participate in this market. Outside of IBD and market surge running about 60 to 80, most other systems that we have in our track tend to be in their, fairly bullish mode if you're some type of trend follower, just given where we're at and the fact that we're not really overbought like we were in many, many names. So I'm less concerned about the short-term technical picture as I was 2 weeks ago, which was very. All right. Dutchman, I've got to me about what we've been up to this morning, and
all right, I had to take the mute off. How you doing? All right. Okay, so we took some profits in PSNL. It bounced right back after the sell-off. We probably should be adding to SIF. It seems to want to march on up. There's no options on SIF, so if you want to get exposed to it, you got to buy the stock. So that's kind of a good thing. And we're talking about these are some smaller companies. We're hanging out in Russell 2000 land here. And let's see, what was the other one we did? We sold off a couple of losers, SOLV and APPS. We got rid of those. APPS is coming off the bottom. It's probably going to be okay. It's going to have days where it's not going to perform. But anyway, we cut our losers quick, so that's gone. We sold Team, we sold TE, 100% of both, took profits there. And then we picked up a little WYFI, Wi-Fi, which is a stock you found a while back, which is looking good. And also a little BFly, BFLY, Butterfly Networks. So BFly is also a smaller company. These are 1 billion, 2 billion market cap companies. We're hanging out, like I said, that's in a BFly's in kind of a high level consolidation, looking to maybe go higher and drift up. So far we're up about 6.5% on the short-term account today. This morning we cut our margin back quite a bit, and we're sitting here with 36% margin, and our largest position is still BB. We like BB. BB's it's kind of righteous trader. It's up a little bit today. And we've been talking to people about how you could be buying that stock. They got a lot of liquidity, and we got a lot of options available, so you can protect yourself on the buy pretty well on a week-to-week basis if you want to hold it. And it's trending up over a week-to-week basis, so you can sit there and buy a big block of it and then write some covered calls and very short term and bank a bunch of premiums. So we just kind of been doing that. We're not doing that in the short term model because we don't do any options trading in the short term model, but we're just saying that, hey, that's an opportunity for those of you that do that. So the largest position, BB by far, and then followed really by SIF and BLZE. Blaze has been looking great. Good setup there. It's been righteous to us. Another company that's had small cap, that's had a change in its corporate life. And then, of course, PSNL behind that. And then we got a couple of biotech stocks that, frankly, that you found for us, Trader Z, that have done well in the short 1 day, really basically, that we've held it 1 or 2 days. And frankly, we ought to double the size of those. And so I've told everybody to stand by. I think TNGX and RLAY are the two that I'm talking about here. And we've got, $30,000, $40,000 positions in each one, and we probably ought to double the size of those. Biotech's been doing really well, man, really well. And it's just kind of like sneaking up on everybody, right? I mean, we know about it, and the carnivores know about it because we've been talking about it. But it's one of those things where all of a sudden somebody's going to wake up on CNBC and say, "Hey, guess what? The entire biotech sector is up 40%," and nobody was really watching it.
The sector seems to be benefiting from some AI chatter. And I'm hearing a lot of talk about what Lilly's doing in pharma internally from an AI drug discovery perspective. And then, things like this genomics trade kind of resurging. Some of these therapeutic trades like TGTX. These aren't big companies, guys, but when they move quickly. TGTX went from 35 to 57 in that bull run. So I think what Dutch is referring to with biotech, here you can see pretty clearly on the daily IBB chart where we had this nice, consolidation for a couple of months, and now we're legging up again. Little stretched here, but getting sucked up today. So I think, guys, what I would share with you that Dutch and I have been talking about last week was, maybe in your short-term trading account, try to keep the account a little tighter. I know Dutch has been running fewer positions, been coming in and out of things very fluidly, and just trying to take what the market would give him while we were getting some back and forth here, because you were getting a lot of back and forth. Intraday, this kind of got, pretty wild to trade intraday versus how you trade something like this, guys, right? So this is very different than where we've been here. I would love to see us get another good leg going and expand out, right? Get another good trend run, but we may not be there just yet. So keep your positions thin with Dutch. Watch what he's doing as he comes in and out of the market. I think it'll keep you out of trouble. Hey, buddy, you want to talk about any of these other ones? You ready?
I'm good.
All right. Hey, over the sector rotation portfolio, we've still got a little cash. We'll be looking to put that to work if the market holds up again this week. I've got a few names I'll probably add to that we just started last week. So we'll look to scale in. I usually give them a pass that first week if we've got a bad entry, just because of the time frame I usually operate on isn't overly sensitive to a poor entry per se on a Friday. We're also locked into these kind of week trades. So I'm using the weekly charts mostly on these, but we may scale into a few of these names, may take some more profits, depending on how the AMDs and the Intels hold up. We've taken a lot of profits in a lot of those names already, but still got NBIS and BE at 10%. So that's a whopping 20% of the portfolio in those two names. Both those names, BE acting really well today, above the 50-day. So just kind of basing out right here around 300, where we've been for a while. NBIS testing the 50-day, got up to 299 and pulled back all the way to 210. We're at 220 here at the 50-day. Let's see if we can't hold that. If we get weaker in those names, you may see me reduce those positions as well. And we'll look to rotate into software. If that trade continues to work, we've got obviously ServiceNow on, Okta. So those are two software names that we added. And I think I'm looking for a pretty hard bounce in a name like Cypher, or it's going to get cut. You're seeing that today. So that's good. Along with names like IRN, CoreZ, all bouncing. So we'll be looking very closely at all positions. If we get further weakness from the semi trade, we'll reduce and continue to rotate into software, maybe even some biotech eventually, maybe even some mag names that have lagged, like a Meta or an Amazon, if we could see an improvement in relative strength. Remember, we can go anywhere, and we're looking for weekly trends, monthly trends to exploit. I think the one I regret most not being in currently in much greater size would be the the software trade with cybersecurity names like Palo Alto and CrowdStrike. Both at 52-week highs today. Should have been in those names in size. Didn't, because I was afraid they had already moved against me. Sometimes that's why you just have to chase the trend. But all in all, just looking to navigate the change here. Fortunately, we had reduced some names like AXTI beforehand, which are down in many cases 50 some odd percent. So that was probably good, just not enough, and probably should have done more. But our buys last week were FuelCell, GEV, Okta, BB, SIMO, and now. So today on the long-term buys and sells, we're going to take profits in FuelCell and ALAB. I'm going to take a huge loss in Toyo. I'm going to buy AXTI here, even though it's up big. I think it's bottomed. We're going to buy BE as well, and we're going to buy GEV. So those are 3 buys and 3 sales on the long-term trades. I've got to get the website updated from our Hinge and SIVF sell from last week. That'll be done tonight. So be patient with us on the website, but we'll have that updated for you very quickly. Godfather, let's do a little Q&A for these final people.
You got it. First, just want to take a couple of people that we invited onto the caller here. Just wanted to welcome you all and thank you for joining us and seeing the different things that we have to offer. As you can see, Dutch and Z, they do an amazing job managing this. And
these calls are great, guys. Thanks for getting on with us. It allows Dutch and I to express so much more information than we can in the written word at the end of each day in the wrap. You know, I tell everybody the wrap is a very rushed, condensed product that we have to put out. And we try to put our thoughts in it every day, but there's just a sort of depth that we can't express in that you can get on this call if you come and hang out with us for an hour, which is what we do, an hour and a half maybe. And it allows us to really, tell you, hey, look, we've got this really deep process that begins with a macro fundamental view of the world that's driven by liquidity. Right now, those liquidity, provisions and positions are not optimal. The Fed's kind of restraining it. So we've got a market that, while it is, robust and healthy and strong, it's not really being driven by excess liquidity. The market trend has been pretty strong for a while. Historically, we believe the signal that it's been signaling to us is that we're going to go higher from here based on, the historical analogs that we have. We focus on growing companies and surging revenue opportunities and companies with great relative strength. Then we use our technical analysis and our systems to identify optimal, patterns and entry points. And then we're actually executing these trades in real time with you via the direct access streaming format or via our text message alert service, or at the end of the week are on these calls with the sector rotation and long-term trade. So if you're new to carnivore, what these calls allow us to do is to synthesize it all together for you in a way that I think very few services do. We do it every week, and we have a lot of fun with the fine people that show up here with us to do it with us. So thanks for
And you guys are the decision makers. I mean, you guys are the ones that are making the decisions on the stocks, and you and Dutch are doing this, and you guys have been working together forever. And it's not a service like you, there's people that stream all the time, but you guys are doing this just like you were back at EF Hutton, right?
Yeah, Bear Stearns and Deutsche Bank and
Wolf of Wall Street,
and all these places that guys where what the vision always was to allow you to come and sit on a trading desk, with Dutch and I, and to watch not only the trades in real time so that you can see, hey, these guys are real and they're making decisions and they hold themselves accountable by putting them out there and then showing you the results, but also the thinking behind them, the logic behind them, and the reason.
And it's one of the other things too is we're not just growth. I mean, we're growth oriented. We want the accounts to grow. Okay, that's what matters. Okay, and we focus on growth stocks because we like those better. But we also uncover special situations. Things that, for example, we were talking last week about what's going on with POWW, something we mentioned, 8 months ago at $1.80.
Hey, I was talking to the DA guys this weekend, Dutch, about Wendy's, which I think could be a viable turnaround play.
See, there's another one. So POWW was a turnaround situation. Wendy's possible turnaround situation. Some of these things, especially when you're dealing with, for example, POWW is now a $278 million market cap company. When we started talking about it, was a $140 million market cap company. So this or whatever, it was the bottom line is it's getting very close to that $300 million market cap. That's the cutoff line for a lot of small cap funds. It's a cutoff line for a lot of investment policy statements that are. Investment policy statement is something where if you are the guy running a trust department at Bank of New York, the board of directors says you can't invest any of our clients' trust money in any stocks less than 300 million in market cap. Mm-hmm. And that is a very, very broad, it's a very prevalent number used in investment policy statements all over the world. Is that cutoff? Well, we're right there at the cusp of that. We have the freedom to actually get involved earlier than when it crosses that 300 million. But once it crosses 300 million, what does that mean? It means there's a huge number of shareholders that have not been able to buy the stock, who haven't even been able to look at the stock, who now can buy the stock. And so that just broadens your possible buyers out there in your shareholder base. And so, that it's just another dynamic. These kinds of special situations we discover. Wendy's, for example, big, fat, liquid. I don't know. What's the market cap on Wendy's now? Go lay down.
Mm-hmm. Probably down to just about around $1 billion, $1.5 billion. Yes, what the numbers are.
Yeah, so here you go. You got a big liquid stock at $1 billion. It's a small cap now, okay? Was a large cap, maybe now small cap, but there's your turnaround situation.
Hey guys, another one that I'm tracking that we made 100% on in the long-term trade list was Open Door. This is kind of this weird meme stock and has a little bit of a cult following. He's trading around 522. I think if you ever saw rates come down, this one would probably take off like a rocket mortgage. Because it's just waiting for a lower interest rate environment in that housing market to kind of resurge off the back of it. So, we're always looking for special situations outside of growth names like that. But look, a lot of our systems were originally built off of growth stocks. The Carnivore 100 has all those systems in it, but it also has a few other new systems that are going to be fed into it. We'll be talking about that at the Bacara for those that you'll be joining us. we're constantly evolving our process to make sure that we're finding, explosive trading opportunities for you guys on all time frames. That way, if you're a day trader, you can come to us and trade along, or if you're a weekly trader, you can trade along with the sector rotation and the long-term trade list. All right, Godfather.
I appreciate that. Yeah, no, thank you guys. That was really good information. All right, let's jump into some of these. Clay W says, how are we feeling about the Dirty Dozen basket right now?
So, look, the list is out there. I mean, Dutch, you want to talk about the Dirty Dozen?
Yeah.
First, kind of explain what it is. If you just a real quick overview, we've got new people on the call, brother.
Yeah. So what happened was we had a pullback, a pretty severe one in the AI sort of space with stocks like GLW and Micron and ANET. Okay. And basically I said, hey, look, let's pick 12 stocks, call it the Dirty Dozen. They got beat up pretty bad. Let's go in there and let's buy these things and say, a week, 10 days, 2 weeks, whatever, a month. Maybe that Dirty Dozen is, I thought I called it the easy money Dirty Dozen because I figured buy these 12 in a basket. It's kind of a basket swing trade is what I'm looking at. And see what happens. And so, yeah, so it ran up right away and made a bunch of easy money like in the first 2 days. Then we got hit with another wave of sell-off in the AI space. I can't even remember exactly what that sell-off was all about. I think it was Micron or something. I don't know. So somebody did something and nobody cared, and I think Micron had blowout numbers and then it dropped 100 points or some weird thing. Anyway, so we still have it up and we're still tracking it. Since inception, we're on day, I think 7 of the Dirty Dozen. And overall, it's off about 6.7%. And that's live in real time right now. And that's it. But how do we feel about it? Like if someone was looking at it and saying, hey, I want to invest in this right now. I don't know. I mean, why don't you just stick with something else we're doing? We're probably going to close that thing out, in the next week or two. So anyway, go on.
All right. Awesome. Thank you. Let's see. Thoughts on the nuke trade, Dan P, SMR, Oklo, etc.
Look, guys, this trade is just waffling. I think there's too much uncertainty around time frame. I think there's too much uncertainty about monetization. I think there's too much technological development that still needs to take place. So while the theme sounds great, the chart is telling you that you need to stay away. And I think as much as you want to bottom feed on some of these thematics that were once red hot, don't do it. Wait for the charts to repair themselves. Wait for the stories to develop. And, we're not playing actively in this space. Hey, one of the things you got to do, guys, is key in, like, if we make an attempt at something short term, like nukes or like, drones, but it doesn't work, it doesn't stick, then you got to move on. You look, and so when the things become more durable, they move into the sector trades and the longer term trades. When they're just short term oriented, you just got to come in and out. Either it works or it doesn't. In this case, the nukes, the drones, these are all being put on really short leashes, guys, because the momentum is not there. Okay. And that would now include things like the optics and even some of the neoclouds and the hyperscalers, or not the hyperscalers per se, but like MBIS and IREN. You got to start keeping all this stuff on a pretty short leash because the momentum is not there. Okay. And I told Dutch over the weekend, I said, one of the things we got to really try to help the carnivores in the second half is not get stuck in names that were working previously, but that may stop working in the second half.
Yeah, this is a big deal. What he's talking about. Because
It's tough
people
sometimes.
people fall in love with stocks like GLW or something. And maybe GLW is a great company, it's a great stock, but maybe for 6 months it's a piece of shit. You got to stay away for whatever period of time that it's going to be a piece of crap and then come back in. And really, it's like the sector. It's about the sector, you know? So like if the sector's going out of style, it doesn't matter whether you own the best company in that sector, it's not going to work. It's just not. We all know that. So don't fall in love with these things, okay? You know, it's just a stock. Remember something. It's just a stock. It doesn't care that you own it.
Yeah.
You're the only one that cares. Okay?
Just floated.
Sorry.
I was just thinking, because you bring that up in the academy, and that I think was one of the biggest things that hits home is you're right. I mean, it doesn't matter that you lost 13%. You just need to go get your 13% maybe somewhere else. That one's not going to give it to you. And you
Right.
make that, and that's because Dave brought up AXTI was $110 on 615. So I think it's a lot lower now. But Z also says we're going to hold the bag, make it a Chanel bag.
Well, you know, and people look, the market's brilliant at extracting money from your wallet. It's what it's designed to do. And people have psychological issues with things like, I can't remember the right term, but all they can remember is what the top trading price was for, let's say, GLW, and they owned it there. And now it's lower than that. But all they can remember is that that high watermark, right? That's the high watermark. And in their head, they're like, I don't want to do anything. Yes. What's it called? Anchor bias. Anchor bias. Thank you, Simon. Right. Or recency bias or whatever. Exactly. So these are psychological terms that a psychologist will talk to you about, and a trading psychologist will talk to you about, where these are human nature, right? It's human nature. And the market uses human nature against you to extract. I told the other day, somebody said something like, so what's I was talking to somebody at a casino. They were like, well, what's the market? What is the market like? I mean, what's it like being in the market every day? And I said, it's like walking down the street in Vegas, and you got to always be aware of the fact that you got really, really good high-speed pickpockets. Okay? They're like all over the street, man. I mean, they're pickpocket. That's what the market does. It picks your pocket. And it uses the psychological stuff that is human nature and natural to most humans against you to do it. So you got to get rid of things like anchor bias and remembering that high price, especially when sometimes you just got to be that it leads to the other thing that's really hard for people to do, which is take losses. And as you can see, every day when we publish, at the end of the day, the trading log for the short-term trading model, some days there's nothing but losses that we took. Some days there's 2 profits and 3 losses or 4 losses or 5 losses in there. Why are we taking those losses? Is that bad? Well, there are fantastic coaches out there, trading coaches, that'll tell you, and other traders. We know one in particular that will look at something and go, hey, you know what? If I'm not seeing you take any losses, I can bet you're losing money. You're probably losing money.
Guys, this is one of the things too that Dutch and I talk about Carnivore. You know, we talk a lot of macro, and Trader Z likes to pontificate a lot. But we also test our ideas in the market in real time. and then we put those results out there for everybody to see. And so it doesn't matter if you're trading the long-term portfolio, you can go and see our closed trades. You can follow the sector rotation portfolio and watch us take losses there and gains in real time. You can watch us do it in the short-term portfolio as well. So we are consistently out there testing our ideas on multiple time frames. And as Dutch says, anybody that says they don't take losses is a liar. If you're in this business, you take losses. And we do it a lot, and we have tough periods. We go through periods where we're doing better than others, quite frankly. Right now, both the long-term list and the sector rotation portfolio are definitely caught in the midst of this technology draft down. But it's kind of how it is. If you've been here for a while, it's just the course of the market. 2 steps forward, 1 step back. But we live it and breathe it in front of you in real time, and we sort of periodically we'll go back through on the next call, go through the long-term list and have an updated performance there for you. But we do this in front of you real time. We show you the good, the bad, and the ugly, and we try to be as real about it as possible.
And Z, you recommended a book a long time ago about the best losers win.
Yeah, The Best Loser Wins is actually the name of it.
That's worth reading because it presents the whole point of view of don't fall in love with your stocks. Be patient with them, but take losses. Get that money going in something that's working better.
Yeah, that's right.
It's a good book.
It's a great book. It's one of the more recent books I've actually talked about with people at the Academy. It's one of the more recent books I've read personally. Here it is on Amazon. If you're looking for a new one for your trader library, it's always good to go back and add a good book to the trading library. But this is a good one.
That's a great find, man. Good job. Thanks for reminding us of that, Roger.
Thanks, Roger.
I tell the story a lot, but I've told the story a lot of times. When I was a young guy on Wall Street, I had an old guy who was a client, very rich old guy, and we think about all these fancy things, like we got the alligator indicator and the MACD and the money flow and all the index and all these different things, right? He was really cool, man, because he would throw $1 million into any position, right? But he said, one day he called me up and he goes, well, I'm talking about the stock that he held and everything. I'm kind of justifying the fact that the goddamn thing was going down, okay? But that he'd be okay with it. And he says to me, son, I don't hold on to stocks that are going down. I only hold on to stocks that are going up. And when they start to go down, I sell them. It's that simple. And he said, is the stock going up or is it going down? Now, on his time frame, which was not short term, he had longer time frame. He had intermediate term, right? On an intermediate term basis, I couldn't lie to him. I said, on an intermediate term basis, your stock is going down. And he goes, then what are you doing? Sell it. So whatever your time frame is, and that's a big deal. What's your time frame? Or if you're a short-term trader, it's one thing. If you're intermediate term swing trader, that's another, or long-term guy. But one way or the other, that trend line on whatever time frame you're looking at is going to tell you whether that stock is going up or going down.
Think about what Dutch is saying, guys.
Don't hold stocks that are going down on your time frame and on your trend line. That's all.
And really, guys, if you think about it, you'll see us consistently. Dutch is constantly exiting, losing positions on the short-term trading. I consistently sell out of losing stocks in the sector rotation portfolio. The only time they ever really linger is on the long-term list, and it's because they're really small. And then, quite frankly, when they get down a certain level, I like to sell those as well after they've been down for a while and they've been on there for a while. So we eventually, the time frame and the stop loss kicks in, and the losers get exited, and the winners, get added. And that's the discipline that we apply to all time frames, and you're going to have to learn to as a trader if you're going to survive as well. All right, Godfather,
So,
you got any other?
So Trader Z, Godfather, before I'm going to interject and ask
brother,
a
go
question that I
Yeah.
want everybody to actually, we got to want it. This Wendy's thing is new over the weekend here. Okay. And I don't want to just brush over it. So we're sitting here with an $8 stock and a billion plus market cap. Do we know what's happening there? And is this a $8 stock going to 16? Is it 8 to 12? Do we not know? Is it going bankrupt? What's
I
happening?
think I'll be honest with you, I don't know yet fundamentally what I feel about it.
Okay.
I
That's
do
what I
know,
thought.
yeah, I do know that I think there's a potential turnaround play here, but I'll be honest with you, fast food is tricky now, and people's choices have evolved, and Trader Z's palate is not exactly that sophisticated. So I've got to look at the fundamentals of this thing, like to see what the private, equity groups may think. Like, what is the real value here of the franchise, if there's still value? Look. This is a struggling burger chain in a world that's saturated in burger chains, and really, even the big guys like McDonald's haven't had a great, 3, 4, 5 year stretch.
I got to tell you, I got a bunch of people around me here that eat. They're a bunch of crazy food people, right? They love food. They don't care whether it's fast food or sit down restaurant. They just love food, right? And they eat everywhere and they eat out all the time. All right. No Wendy's. They don't go to Wendy's. Okay. In the fast food space, they'll go to Burger King. They'll go to Chick-fil-A. They'll go to that. Okay. But what I'm finding is they're now moving to like Santa Maria Burger, which it's not a chain, but they have the best burgers on the planet. I've had them. It's insane. I'm like, now that's a real burger. So I think a lot of these fast food guys, it's trouble, man.
It is. There's undoubtedly been a huge shift in consumers' taste about fast food. McDonald's and a few of the other players, like, probably Burger King, because they were already through some of their turnaround issues. They've done better than others, but man, some of the guys like Wendy's have really, really struggled. Hardee's, obviously, Carl's Jr., those kind of things, I don't think have had a good run. Fast food business isn't what it used to be. Labor, material costs, post-COVID, world, I think all very challenging for fast food. So we'll dig deeper.
Okay.
Yep.
Well, the other one you brought up was RBRK.
Now, hey, Rubrik, look, this is a winner, guys. Here's a boomer within.
Well, it's rocking.
Cybersecurity.
It's rocking right now, bro.
Yeah,
that was a great call this morning.
And look, we talked about this one, guys. One of the things that we like to do over the weekend and at night on the direct access thread is to tee some things up for you so you can do a little bit of your own legwork beforehand. And this was one we had teed up last night to everybody and to Dutch. Great pattern, great company, great space, right space. This is in cybersecurity. So keep your eye on Rubrik. Hey, the other one I like in that group or in that sort of software space is this Take-Two.
Yeah.
I think you're going to see maybe this one break out. If you look at the 2-year, peak was 264. So relative to a lot of software names, this is pretty good.
All right, I'm done talking.
Yep.
So,
So hey, those are the two that I'm watching. Hey,
Okay. Yep.
we'll let somebody ask the question now, Godfather.
Okay. Let's see. All right. ELV. Let's see. Thoughts on ELV, please. That's from Bradley.
Bradley, I don't know this one. You've been finding some good healthcare stuff. So, not a bad looking chart. Provider, not a huge distance here from the 200-week moving average. So you're really not extended. Monthly looks pretty good too. Bradley, this is pretty good looking long-term chart. It'd be better if it get back up. Good MACD crossing, 88 billion. This is a big company. Look, this is one of these names, guys, where I would probably say highly unlikely that we're going to trade this. Okay. But this could be something that ends up playing out well in a real sector rotation away from tech. That's probably why you've legged up here like you have. Bradley, what I would do in this case is see what we've got that's in the same space with better relative strength. It looks like CLOV looks like a winner. So that one's got a 97 relative strength and managed healthcare. ASTH. You look like you found the big dog at 88 billion. See, he's bigger. That's twice as big as Humana. So yeah, Bradley, that looks like the blue chip of the space. Probably a decent place to hide out. Maybe it gets up there to say, profit 475. Probably not a carnivore trading stock though, buddy. But good looking chart long term. Good question. Next.
Yeah, so if we can nail a couple out by talking about NBIS. You think it gets back to a G note? What are you
Okay, so look, long term, super bullish, intermediate term, I could see us needing to cool off a little bit. Guys, remember, we did this for a long time. Maybe you do it again. Right? So I will be holding in the sector rotation as long as we stay up probably around here.
Okay.
If we break down from here, I might reduce on Friday. Super bullish long term. If you've got a big tax liability in that, you got to decide how you're playing that. I think this is a very, very large company one day. So if you had one that I would, at least keep some of it on for long-term reasons. If you got some kind of buy and hold portfolio somewhere, it would make it. But I'm just telling you where I'm at with it. I need it to hold up here to keep this size of exposure.
Tax liabilities, man. Tax liability. That's CPA's problem, man. You're a trader.
Yeah.
It's not your problem.
That's right. Look, if you bought it at 75 and you're sitting on it up here, though, you're sitting there looking at your situation and saying, I owe some money here. So, yeah.
Just don't pay taxes. Just don't pay.
You could lose all the trades and wipe out your gains. That's another way to do it.
No.
Did I say that out loud?
Hey,
No.
look, NBIS, though, I'd like to see this hold here, and I would like to see a box develop like that, right? That's what I'm looking for.
Yeah.
Put the IRS in a box and
Yep.
blow it up.
No.
All right, next.
David Oust. Dutch, whoever's in the background talking.
OUST. Hey, massive.
Whoever's in the background. It wouldn't be Dutch because we don't want him to be arrested by the FBI tonight.
We do not. OUST.
OUST breaking out last week. Nice big move. I think we had this move kind of confirm my belief that this stock is in an uptrend. But boy, this stock it's sloppy. You go from 63 to 48 in 3 sessions. You go from 39 to 63 in a couple of sessions. While you were basing around here, you were going from 49 to 36. So be careful. It moves around a lot. I think it's in the right spot. I think, these guys are going to be the eyes of a lot of robotics plays. So good volume. I think you got to let this one ride if you're in it.
Let's see. Todd C said, "What are your thoughts on SITM?" uses AI for synchronization.
Yeah, look, we've been watching this one. Had a little disappointed that we lost to 50 last week on Friday. Decent bounce today. Had some big selling on some volume though. So this is kind of a wait and see. I want to see hold this and then kind of stay up here, right? And then guys, what you look, a lot of these charts look the same. You got to start seeing this. Okay, we had the big move up. Can we get the big trade sideways and make it more of a, a scoop than something where it looks like it's rolling over, right? The rollover is going to look like that. So a lot of these stocks are going to tell us in the next couple of days, are we doing this? Are we going to go up? Or are we going to break that down? We're going to go down now and kind of track this. So you're kind of at an inflection point. This one's got some work to do. First thing to do is to get back above the 50-day. Don't want to lose 600. Next question.
Okay, yeah. Anya just asked about CLSK. I know we talked about CleanSpark a lot last week.
Look, it looks just like the rest of the space. IRIN,
Cypher, right?
Cypher's
up big.
HUT, APLD, Corzi. The question is, look, guys, nobody believes in this business. Nobody believes that these data centers are going to be operational. It's the damnedest thing to me. It really is. This whole thing is it's just very bizarre. Everybody thinks this is some kind of giant bubble, and in 5 years, no one's going to be using ChatGPT, I guess. I'm trying really, really hard to understand. And I think it's this leftover pessimism from the dot-com bubble. Basically, like every money manager, every middle-aged man he just believes every tech thing is a bubble. And they're going to be the Big Short. I'm serious, man. And everybody's the next fucking Michael Burry, and they're calling the Big Short, and they're going to make a fucking movie about him one day. And they're all going to seem so smart because they were contrarian when everybody else was like, oh, AI is going to change the world. I'm trying to understand it. I swear to God, I am.
Yeah.
But I just, it's like NVIDIA. It's like we're going to trade it 10 times earnings because it's a bubble. This thing hadn't been a bubble in 5 years at this point. It's just nobody believes that AI is going to drive any legitimate margin improvement, and none of the spending is sustainable. And this is all in big, giant CapEx bubble that's waiting to unravel.
Well, what do we know that's real, buddy? We know that they're spending the money. Okay, because we see it in the earnings reports, okay? So we know that that's real. And what else is real? We know the data centers are real. You can see them, touch them, feel them. They're out there in the middle of wherever, Wyoming, Ohio, Idaho, whatever, wherever they're building them, and they're building a lot of them. So I'm with you, brother.
I'm
with you.
And this is kind of the foundational technology of the next, level. And it's like someone said the other day, I heard like a layman observe. He was kind of like, 5 months ago, nobody I knew was using AI. And yesterday, my parents said they were using ChatGPT instead of Google. Okay. Well, if that's the case, man, are the parents going back to Google? Are they going to keep using the ChatGPT? Because if so, then the data center's got to keep humming. So I don't know, guys. We're really at this it's this narrative of like poo-pooing the future, poo-pooing America. Okay, whatever.
Well, look, hey, buddy, we know history. Airplanes are a fad, by the way, and so are railroads, and so are cell phones.
It's right. But all right, hey, I got off. I'm off the box. We'll answer another question now.
Okay, yeah, Mike Ingles did. But first, looking forward to seeing you and Cherry and Jody out there. They're gonna bring their golf game, Dutch. You might owe them $100. I don't know. I think they can golf. Um, and I think it's he's looking forward to it. SI, just so y'all know,
Just-
Dutch.
I'm just gonna
bet
bring a
everyone
big
$100.
I'm gonna bring a big wad of hundreds because I have a feeling I'm gonna get spanked.
It's SI, but he did ask about, and we had a couple others ask SIVEF. Couple questions on that one.
Yep. So look, I'm hoping we've got a bottom at 456 here Friday, right? Nasty correction, about a 50 and 60, probably close to 61% retracement here. What goes up must come down, right? This is all part of that broader photonics trade. We've got a lot of names here that could look very similar to this. If you've ridden it this far, I would say continue to keep some of it on. Maybe if you get a nice bounce up, take some of your exposure down if you didn't up at the top. But I'm still a believer that this is going higher, guys. I think you're just having this nice big correction across the board in the photonics trade, whether it was an AAOI, whether it was AXTI, whether it was SIVF or COHR, GLW. I think they all just kind of shot up and corrected, some of them more than others. But this is a trade that probably has to put in some work, right, in time. So even if you catch a bid here, you're probably going to get something like this, right? So that's what I'm looking for now. So let's start consolidating up here somewhere around the moving average, around $6. And then let the fundamentals continue to build for the next leg up.
All right.
Nothing's changed. Hey, the sign there, guys, would be I moved it into the sector rotation portfolio. It's in there now. I'm holding it at a loss. I haven't sold it. I might buy more. I might sell it. I would key off of me there.
Okay, let's see. I've got 4 tickers here. First app, I know Steve M said he started selling calls on APP. I know we messed with that one last week.
Yeah, look, looks like it's just kind of doing its thing here, guys. This is probably one of the better charts in software. Pretty high level consolidation after a big run up. I like this company.
Now as well, right?
Yeah.
Now.
Yeah, this would be one that might, be a leader in a real software recovery. Trades kind of wildly. You can see Friday was rough. But what you want to see this one do is get back above the 200-day and then for the 50-day to cross up through the 200-day moving average. So that'd be your next confirmation is, get that leg up and then get this 50-day to cross through the 200-day, on the upside. And that would kind of reconfirm we got a surging uptrend.
Nice. Let's see. I've got 3 more tickers here. One was Simon brought this one up of MBGL, Mike Bravo Golf Lima. Started trading last week. It's Carfax and Polk spinoff.
Say it one more time.
Yeah, it's Mike Bravo Golf Lima. MBGL.
MBGL.
Yeah.
Don't know this one. Obviously, new issue.
Carfax and Polk spinoff.
So, what part of the business got spun off?
From S&P Global.
Okay. So here's your IPO on a 5-minute. Little weakness out of the chute. Let it find a floor before you try to buy it.
Yeah. And 2 more tickers here. I have one from Lisa B as SHAZ.
Sure BI.
Looks like something filling the gap. That's all I see. I don't know this one.
Don't know that one. Interesting.
Write
this ticker down.
Yeah.
What's the question specifically? Like if
that was just
you
your
already
thoughts
in
on it. Yeah, there was Lisa Lisa B just asked just your thoughts on it. It's not one I've heard about.
Yeah, no, I hadn't either. 2 billion in contracts, 1/4 of proof. So we've got some kind of backlog.
DC said, didn't Leopoldo buy that one? Leopoldo.
Oh, you're talking about, is it part of a situational awareness portfolio?
Leopold.
Yeah, Ashenberger. Yeah, that's situational awareness. I don't know if this is one he purchased or not.
Okay. And
I'll have to do
then
some legwork. Okay. Hey, look, here's your.
Go ahead. I'm sorry. Go ahead.
No, here's your. So you got some kind of backlog. Got NVIDIA, obviously some adjacent to NVIDIA. I don't know this one. Let me do a little work. I mean, obviously, half the 10x multiple assigned to CoreWeave MBS, so it's obviously in that MBS CoreWeave IRM play. A lot of people looking for smaller neocloud plays that are sort of undiscovered. This is what is being described. Don't know this one. Let me do a little work. Thank you, Shaz.
Nice. Yeah.
There's a few. This Brun comes up. Wi-Fi, another one. Kill. So there's some out there for sure.
Greg B said, any thoughts on SLS? You had that in our second half 2026 portfolio. Good memory.
SLS.
Yeah, remember that you did this for, you're going to do these for the second half.
Yeah. This biotech, this ticker SLS is what he's asking about?
Yeah.
I mean, look, it's been on fire. It looks just like the biotech chart if you look at it. Took off with it right on time. Look, wow. If this biotech trend lasts, we're gonna be back in here. I'm always reluctant to chase it because I'm always concerned it's not gonna have legs. But if we get in some sort of full-blown rotation out of tech, it's definitely gonna have legs. So kind of building this name list out. This one obviously has been an outperformer, but you're going to have mixed sort of stories when a biotech doubles. Does it mean it's time to sell, or does it mean it's time to keep it? Guys, the problem with biotech is it's all about TAM. How big is the total addressable market? Drug discoveries, when are they approved, what phase? It's really very challenging. And it's also very fickle. But if that's where the market goes, that's where we'll go. But I don't have a specific read on SLS now. I got to tell you, if you've made money here and you're in it already, you might want to ring the cash register.
Yeah. Well, you said that it was going to be raising for second half, so you definitely got that one right.
Yep.
And last ticker I have here is from Bernard. He asked about MSTR.
So the word is they sold a bunch of Bitcoin, about 200 million worth.
Yeah.
To cover interest expenses on the preferreds. Stock seems to actually like it. Bottom looks like around 81. Guys, the reality is MicroStrategy is going to do whatever Bitcoin does. So if Bitcoin turns around and goes to 120,000, MicroStrategy is going to turn around and go to 197 or 200. But you're unlikely to ever get the premium that you once got, given so many tracking vehicles out there now. So at best, you probably get to 200 or something. I mean, if Bitcoin goes a lot higher, MicroStrategy goes a lot higher. But I've always said I'd rather just own Bitcoin. I think the preferreds are okay if you want to swim in that pool. I think they're viable here. I know they've pulled back since they issued them, but nobody's selling them. So if you're holding them, you're holding them for income purposes. They're still paying. MicroStrategy, you want to see bounce with crypto. I think it helps overall space. Bitcoin's back above 63, so we've had a nice reversal here. MicroStrategy is going to track Bitcoin. It's not my preferred tracking vehicle. I think crypto has probably bottomed. But I've been saying that for a while now. So don't read too much into it. Hyperliquid definitely is the strongest name in the space. And yeah.
And
You know, if you're a MicroStrategy holder, you're thinking that Bitcoin's about to turn around and go to 70,000.
and I saw a
Otherwise,
couple.
it's dead money, or even worse, it's going down.
I saw a couple in the chat. Of course, from my own personal knowledge, what Hood is looks like it's really taking that 100 finally, or that 105. What do you think on her
Oh, which one?
Hood?
Hood. Oh yeah. Hey, look. I've been talking about Hood for a while in the direct access thread. I like this chart. We've got a nice recovery here. I remember losing 50% on this one on the long-term list. Classic 50% drop in a growth stock. People really question the whole thesis, the company, everything. It's just a drawdown, turns around and goes to new high. That's what it's doing. If you get a full-blown crypto rally, this thing really take off. So Robinhood doing a lot of good things to execute, keep people engaged, volumes growing, new people coming onto the platform.
I kept getting pop-ups that says if you have any SpaceX stocks, or if you're in the IPOs, if you bring it over to them, they'll give you a 1% bonus on it. So
they're very
really
clever like
trying.
that. They do a lot of great specials to entice people to come over. This is a good recovery trade. Hood. Dave is the other one. Sold that one too soon. Yep. That was one we wrote about in the wrap. Had it on the long-term list, sold it too early, but we got caught in a 50% drawdown as well. Held it till we were profitable, and then probably should have just held it longer, but we didn't.
Cool.
Yep.
Yeah, and I've got two others. I'm going to send those to you and Dutch. They'll be good ones to answer in the wrap over the week or so.
Fantastic. Guys, you were with us for an hour and a half. We sure do appreciate you being here.
Thank you, G. Thank you. Hey, Roger, thanks, buddy. Good seeing y'all.
DA guys, we'll see you on Thursday.
Yes. All right. Thanks.
Take care.
Bye now.